Hey everyone, it is Evan here from the Trade Risk on Wednesday, March 18th. We are intraday right now, and this is our weekly swing trade ideas video where we bring you some of the names on our watch list, stocks that are holding up well. That's what we're looking for in this environment, curating strong stocks for when this market finally does catch its footing. We have a go-to list of names that we can lean on for that market exposure, and hopefully names that can help lead us higher and outperform the broad markets. As always, these videos are powered by our partners over at Investors Business Daily. We curate ideas from their stock lists. You can get access to their stock lists with a link in the description of this video. So we're going to start off with our ideas here. We only got two trade ideas that we're looking at least from our bullpen, and then we have a couple that we're looking at from IBD's list. First and foremost, for the general market recap, for our thoughts on what's going on throughout this chaos, we did a video yesterday. You can tune into that last video on the blog or on the YouTube channel to hear our thoughts on the latest market environment. When we look here at what has developed this session here on Wednesday, we've basically continued to break to new lows here, 32.73%. That is the current tally off of the highs made just about a month ago. That's the extent of the pullback at this session's lows. Now, there's two relevant things here. So the first trade idea for me is simply just the S&P 500, and the reason for that is because frankly, a lot of these correlations, a lot of the stocks just tend to be lumped totally together and are sold and bought indiscriminately when you have a VIX at 80 or 70 or frankly 40 plus. Everything, a lot of things tend to trade in baskets. So to get market exposure, to play for a bounce, to play for that long side, I think the S&P 500 is a fine vehicle. Pick your index of choice. The Q is doing a little bit better, but generally speaking, owning quote unquote the market, I think makes sense here. Now doesn't make sense right now, but makes sense as a trading vehicle. Now, in terms of timing here, the two things I'm looking at now are these two lines. I think these are the near-term levels to pay attention to. The bottom line here, this 2346, that there coincides with the lows from 2018. So we finally have broken below them. We've finally got that official test of them today, and you can see we're recording this video late. There's only about 15-20 minutes left in the session right now, but we did break below that, and it looks like we're set to close below this level. So for me, looking at the S&P 500, looking at any broad call here on the market has obviously been completely wrong and too early if you've called bottoms here anywhere in the past several weeks since this market started to drop. But going forward here, looking ahead, the levels that I'm interested in now, this 2346, to show that we can now get back above the lows from 2018. And then more importantly, this 2378, that coincides with more or less the lows here from Monday and Tuesday of this week. So if we can get above this band here and start holding, whether it is into the close here in the next 10 minutes or if it starts tomorrow, that's what I would be looking at, is essentially a hold right now of this band. If that can happen, then I would be potentially interested here to actually start to look at the market and playing some type of rebound here. If we continue to slide lower, if we continue to trade below this area, I would not be so keen on jumping in just yet for at least an active trade anyhow. So 2346 to 2378, looking at this SPY in particular, that's the zone there. Start getting above there, and I think you have at least some signs there of buyers stepping in, and again, early signs, but something that you can sort of hang your hat on and define your risk against. So S&P 500, that's the first trade idea there from our list, and number two is just straight up consumer staples. I'm just going to look here at the XLP. I mean, we own the XLP right now in our trading system. So we're outright just long the sort of aggregate sector here, but there's obviously individual components that are faring better than others. Not all consumer staples, of course, are treated equal, and not all are able to weather the storm or even benefit from what's going on in this unfortunate scenario right now. So XLP, I dig through some of the components there. There's lots to choose from, and originally I was going to look at a bunch of different ones, but frankly, XLP or looking at some of the individual components in that sector, I think makes sense. And again, we are long XLP here, so we do have exposure to this sector. Now, getting into some names from IBD's list, I'm really only going to highlight two. The first is Alibaba. This one here has just been holding up. It's back to its range here. Of course, it's sold off from the recent all-time highs made. It's down 25%, so a little bit more of a market outperform, but pretty much in line with the market. Thing is, Alibaba being the monster that it is in terms of market cap and just the breadth of industries and support that this company has, it's very similar to what I would consider our second trade idea and the Amazon. And Amazon here is basically the two stocks I want to look at, Amazon and BABA. I kind of treat them very similar here. Of course, the countries in which they're operating is a little different, but or the primary business anyway is certainly different, where the bulk of those revenues come from. But I think we can clearly see in kind of both of these stocks here, and maybe a little more in Amazon, this is a clear beneficiary right now of the unfortunate chaos that's going on right now in the world. And Amazon, with the increased 100,000 more workers coming in, I mean, we've got a company that's in fact actually hiring into kind of this madness. So Amazon here, that combined with just all of the stimulus and the Fed incentives and everything else that's getting pumped into the system of cheap capital, low interest rates, et cetera, et cetera. I think the large bellwether companies here are going to just do well. So Amazon technically just back into this range here, back into the range of 2019, really hasn't suffered any major technical damage. It certainly failed in its breakout attempt over 2100 or 2000, but certainly, faring better than what a lot of other technicals look like on stocks. And it too had, at the lows of this week, a 25% pullback. So again, a little better than market, but still kind of market perform here in a company that is going, or at least seems at this point, going to weather the storm fairly unscathed. So Amazon, Alibaba, very similar reasons, and in fact the technicals here look very similar as well. So back into this range for Alibaba. Those are the two ideas coming from IBD's lists, and just some of the stocks that I think can hold up. So Alibaba, Amazon, XLP, and those individual components, and then of course the SPY just outright. I would be paying attention to that as well. So that's it for me. Hopefully you guys are surviving out there, to say the least. I think surviving is actually a good, a good thing at this point. You don't even have to be thriving. I think just surviving at this point is a great accomplishment. So hopefully everybody's doing well out there. Thanks as always for tuning in to our videos, trade ideas just like this every Wednesday. You can subscribe on our YouTube channel or follow us at The Trade Risk. Thanks so much. Have a great rest of your day. We'll see you back on the YouTube channel on Friday for our market recap video.